Is there sound? Can you hear me? Good evening, everyone, and welcome to the Foreign Correspondents Club of Thailand. My name is Tan Hui. I'm the board member, and I'm a board member of the FCCT and the Indochina Bureau Chief of the Straits Times. We are gathered here today to talk about Thailand's economy amid its political transition after the general election. And I have to qualify the word transition here. At this point, it's still not clear when the new government will be formed. We did have some good news this week with the election of a new speaker in the House of Representatives. So we do know that things are moving along. It's been more than a month since the general election was held. And in this election, the Progressive Move Forward Party surprised everyone by winning the most number of seats in the lower house. It has formed a coalition that holds a majority of seats in the 500-seat lower house, but it needs at least 376 seats to secure the position of Prime Minister for its chief candidate, Mr. Pita Limjaroenrat. Now, whether that support is attainable is still a question. Some senators have expressed misgivings about Mr. Pita. He's also under probe over the alleged illegal ownership of media shares. Now, amid this political uncertainty, how is the Thai economy faring? This country used to be called Teflon Thailand because people assumed that its business sector would continue chugging along no matter what kind of political troubles the country was undergoing. And does this still apply though? Or will the economy be affected by a prolonged period under a caretaker government? My colleague and FCCT President Lisa Martin has gathered here today for experts to discuss this issue. We have here Dr. Kiatipong Ariyapruchya, a senior Thailand economist at the World Bank. He's here to your right. Next to him, we've got Kun Burin Adunwatana, Chief Economist and Managing Director at Kiatipong Research. To his right, to his right, and to your left, we have Dr. Anachanok Sakundawat, a senior expert on macroeconomics at the National Economic and Social Development Council. And then to her right and your left, Dr. Chai Parasuk, a freelance economist and a Bangkok Post columnist. So this is how it's going to proceed. I'm going to ask all of these experts here to give their short take on the current state of the Thai economy, and then we will proceed to the more exciting Q&A. First with me, and then with our audience gathered here. So perhaps I'll start with Dr. Jen, Dr. Kiatipong. Could you tell us what you think about how you think the Thai economy is faring now?
So I have 3 minutes, is that right?
Yes.
Okay, so I'll be very brief. So I think the global context is one, it's a bit dimmer, slowing down of global growth. We revised that down to 2.1%, but that's primarily due to advanced economies. So emerging markets, Asia is holding up better than advanced economies. So if we zoom to Thailand, for this year we actually revised up Thailand's growth to 3.9 because of tourism and the reopening of China. But we have revised down growth in the outer years to 3.6, 3.4 because of the slowdown in global growth, particularly global trade in goods, but services is still growing. So you mentioned Teflon Thailand. I think for Thailand, Thailand has not been immune to many shocks in the past. COVID shock, Thailand just only recovered to its pre-pandemic level at the end of this year. So the last to recover within ASEAN because of Thailand's high exposure to tourism and also to trade. So when trade slowdown happened in last year, Thailand's trade slowed down significantly. And another shock that also highlighted Thailand's exposure is the energy prices, Ukraine-Russia war. So Thailand had a spike in inflation, highest in the region last year, 6%, because Thailand has the largest oil gas imports in the region. But now inflation has fallen down to the target range for the Bank of Thailand. That's around 0 to 3%. So that's good news for stability, internal stability. But there could be some pressure, underlying pressure in core prices, which needs to be monitored. On the medium-term outlook, if you go beyond these 2-3 years, we revised down our potential growth to around 3%, which is reflecting Thailand's aging society, escalation of the climate impacts, floods and droughts, for example. Seems you look at the data on temperature, precipitation data, they seem to become more, there's more variance in the amount of precipitation, not only 2011, 2015, and so forth, and also mean temperature has been rising for Thailand. So the impact of climate, for example, like another major flood, like in 2011, could be as high as 5 to 10% of GDP. So that will weigh down Thailand's potential growth. Other factors that would weigh down potential growth include declining export competitiveness, hence Thailand's slowdown in exports in the last year. One more point I want to raise that is interesting is Thailand's level of inequality. So it's been becoming a rising issue in the last 5-10 years. And if you look at the data, like the income inequality data for Thailand, compared to other countries, Thailand is quite high compared to middle income. It's in the top quartile, actually. And if you look at on the wealth side, if you look at the top 10% of the wealthiest, they hold a sizable chunk of the country's wealth, around 40%. So that is high compared to other countries in the emerging market area. So that we can go into more detail now about why that is in the later round. So I'll stop here.
Thank you. We've got quite sobering statistics on inequality there. Our next to go to Dr. Anand Chanok. Please.
I have some slides to share as well. Yeah, so because I have the data and graph to share, so I'm just kind of like recap again. Okay. Yeah, since I'm from NESDC, which is the official agency to release the GDP data, so I would like to show again that after the COVID-19, you see that the Thai economy recovers steadily, as Dr. Kiatipong has mentioned, from minus 6.1 to 1.5 in 2021, and then 2.6 in 2022, and 2.7 in the first quarter this year. And if you look at on the quarterly growth, you see that at the end of 2022, we see a little bit of slowing down with the Thai economy. That will be as a result of the global slowdown, one of the facts, and also in terms of the end of the government stimulus measure. So you see the government spending in the last quarter declined. And this is a monthly indicator that we try to make in a dashboard to see the colors of that. Don't pay attention to the data, to the figures. You see that in the latest data in May, you see that the key contribution for the Thai economy remain a strong recovery of the domestic demand, in particular private spending. You see the very high growth of almost 8%. And also together with the very strong recovery of the tourism sector, definitely. However, in the red zone, you see that still resided in the export sector. Export growth declined by 6% and has been making the manufacturing production growth to decline as well by 3% in May. So I would say that for this year, NESDC, according to our recent, latest press release, we forecast that this year we grow by 2.7 to 3.7% in the mid-range of 3.2. And I would say that the key supporting factor would be from both the strong recovery of the tourism sector. 28 million this year, definitely we will get that, because for the first half of the year we get almost 13 million already for the foreign tourists. And for the second half of the year, which is the very high season, so we believe that 15 million will be achievable. And the second factor would be the recovery of domestic demand, and also both in terms of domestic spending and also the investment, both from private and public sector. However, in terms of the risk and key limitations factor, as Dr. Kiatipong mentioned, in terms of the global, situation, in particular for the geopolitical conflicts and also the intensify of the, trade war between US and China, currently that we could foresee somehow, and also we could not neglect out in terms of the high inflationary pressures that still remain high if the central bank could be possible to return to that rate high again. For the domestic factors, and the SDC see that the key limitations and risk factor would be in terms of the high debt, both from the household debts and also the NPLs, in particular in the SME sector. And also including together with the fact that climate vulnerability in terms of the El Nino effect that could affect in terms of agricultural production. And lastly would be in terms of the political conditions that could delay our budgetary process. That on our baseline scenario, we expect that the budgetary process for the fiscal year 2024 will be delayed by 3 to 4 months. So be able to start our disbursement for the fiscal year 2024 in February. That's what our baseline scenario for our 3.2% growth for this year. As I mentioned, through the investment, in particular for private investment, you see that in 2022, according to the data by the Board of Investment, has reached a historically high of about 620 billion baht in total for the year, and also both in the EEC area and outside the EEC area. And in the first quarter had reached about almost 200 billion baht already, and surprisingly that would be from South Korea as a source of fund. And this is what I would like to share. This last slide would be those companies who already receive our Board of Investment coverage and has relocated their production base to Thailand, both in terms of the next generation automotive, smart electronics, and also digital industries. So that would be all, in terms of what we see for this year for the supporting factors. Yeah.
Great, thank you very much. Dr. Chachai, would you like to give your take?
Can I be the last? Because my number will be the lowest. 3.6, 3.2, and you hear. Yeah.
You want me to go first?
You want Dr. Kumburin to go first?
Yep. You go
Okay,
first.
sure.
Okay. All right. Good evening, and thank you for inviting me here. It's an honor to be here. I just got back from Germany this morning, so if I start speaking in German, just raise your hand. But from what I've seen so far, during the last couple of months I did a bit of traveling, I see that the service sector is very strong in both the US and Europe, but manufacturing is down, and this is probably coinciding with the fact that global demand is slowing. And I was in Germany, I read the news that manufacturing, especially auto export, is coming down, but service sector, the tourism sector, is doing really, really well. On the way here on the plane, I read that the Accor Hotel Group just up their forecast for the year that the profit will be up by 40%. Singapore Airlines is paying record bonus. So the tourism sector is doing really well around the world. But what we see, I think the boom in manufacturing that we saw for the past couple of years is over. So the manufacturing side, the global demand, external sector is going to be very weak and in contraction. The cumulative effect of interest rate increases around the world have yet to take the toll on the economy. So we have yet to see the recession around the world. We forecast that we would see a spring recession in the US. That has not yet materialized. It's going to come, some people said summer, Now they said it could be the end of the year. That's a winter recession. We don't know yet, but a lot of monetary policy transmission has broken down. The interest rate increased by the Fed by 5% normally would have brought the economy down to contraction territory, but that has not yet happened because the people are on fixed mortgages. A lot of things have changed in Europe and also in the US. So the tightening effect has not really taken place. The effect will be felt much later. But what we do know is a recession is coming. But when? That is the question. It's not if. So the delay to the recession that the central banks around the world have been expecting will take longer to materialize. But that's going to cause, we're not going to expect a soft recession. Had it happened sooner, we would have expected a softer recession. But now it was going to take longer, and the impact will be much more painful to the rest of the world. So that's the global backdrop that we saw. And that is translating into Thailand. What's happening in Thailand is we saw that our export orders are falling. The export sector is not doing well. Our original forecast of export will be -1 this year. But now we say that this could get lower. I think we have heard some concerns amongst the industry players that this number could go down to -2%. So the export sector is doing worse than expected. Tourism sector held up well. Actually, it bounced back very, very strongly compared to the number last year of 11 million visitors. This year, at K-Bank, we're expecting this number to be around 28.5 million, and that could be on the low side. But that said, the composition of the tourists have changed from pre-COVID to now. Now, the number one tourist, foreign tourists in Thailand is Malaysian. I mean, there's no knock to Malaysian friends, but they don't spend as much as Europeans or Chinese. So they spend roughly around 25,000 per head. Compare that with the Russians spend about 70,000 per head. The Chinese before COVID was about 50,000 per head. We have yet to see the resurgence of the Chinese tourist. I don't know, due to maybe complications with the visa issue, maybe there's some, the Chinese consumer do not want to spend. At the beginning of the year, we were expecting the world to be, the two sides, the East and West. The West would be slowing, would be in recession. China would be bouncing back strongly. But do not underestimate the resilience of the US consumer. They keep on spending. They're spending more and more to keep the US economy afloat. But the Chinese consumer, on the other hand, we expected them to spend like there's no tomorrow because, having been in COVID for 3-4 years. But no, they do not spend. So we see that the domestic demand in China is falling, and that is having an impact on our export. But that said, we still expect our GDP to be, this year in 2023, to be about plus 3.7%. But of course, there are growing downside risks coming from slowing global demand and the political uncertainty that we will discuss later on. Another pressing issue that I think is on everyone's lip at the moment is the household debt. Having reached the record of 90% per GDP, but that issue we'll discuss later. Thank you.
Thank you. So, Dr. Chachai, your numbers worse than that?
Yep.
Yes.
I don't have 3 points, I have 2 point something. I am a monetary economist. I believe that money drives the economy. The bad news is that what kind of money driving Thai economies for the past 5 years? Next slide, please. The debt, not money from income, money from debt. I relate increase in debt with the GDP. I find a very strong relation. You see the last line, I even put a number of tourists because most people think that tourists is the saver of Thai economy. But I show you the year the tourists were almost 40 million. We still need to borrow a lot to drive the economy. The year 2019 that the government slowed down the borrowing, you know why? because they're hitting the legal limits of 60% of GDP debt. They have to slow down. Once they slow down, the economy slow down. Despite 40 million tourists that year, skip the COVID year. But then you see, when we come back at 2022, the same story again. Debt drives the economy. So when I get this, I have proved to myself that debt actually drives the economy. Actually, it's not a mystery. If you are an economist, you will know the famous equation MV equal to PQ. The money grow, the Q go, right? The next one. So what I try to do is that I try to determine what is the outlook of debt in 2023. Next, please. Nakab. The first one, we are seeing it, is that the household debt is reaching its limit. The first quarter of last year was quite interesting, that bank no longer issue loans because the NPL was rising, the debt limit had been hit. We having 90% of household debt per GDP, very high, too high. But the last quarter of last year, there is a saver that is non-bank. Non-bank just come into the market, want the customer and issue that you see. Non-bank issue debt 155 billion baht against the debt from the banking sector. You know, when I finish this table and send it to the moderator, the first quarter number came out. Confirm. In the first quarter of this year, commercial banks expand loan by 1.1 billion against 5 billion before, and non-bank claw back because they issue too much loans in the final quarter of last year. They issue only 32 billion baht in debt. So we see that debt is slowing down and growth will slow down. That's why we have only 2% growth in the first quarter. But you will be shocked to see the second quarter and what's coming. Next, please. Household, no place to borrow. Government is the same. The government, even though they increased that legal limit to 70%, so I estimate government debt for this year, which is not hard because we have the fiscal year, and then all I have to do is to estimate the public and enterprise debt. So this year, the government will issue debt less than last year because they are hitting the limit again. You see the number legal limit. Public debt is 61.3%, but there are two debts that the government has not included in the book yet. One is occur but not book. The other one is not future debt, occur and not book. It's such like the debt that live at state banks. They haven't booked as a public debt yet in state bank, such as agricultural price guarantee. And future debt that not booked debt, just such as the BTS, so 78 billion baht, they're not booked yet. They just hit then. So, next one please, thank you. So, from estimating the public debt and the private debt, I get the total debt of 1.5 trillion, about 1 trillion baht for this year. Remember these numbers, and I will get the GDP number from that. But to proudly tell you, we have a public debt for 5 months. Actual number of 5 months now is 271 billion, and my estimation 801 billion is on track. But for the first quarter of this year, actual household debt only increased 88.2 billion against my projection of 122 billion because banks are not happy to issue loans. Next one, please. This is how I get the total debt, right? I have then the total that translates into GDP, that's about 60% GDP growth, and have to estimate the inflation, let's say inflation at 3.4%, so I get real GDP growth based on monetary approach of 2.6. I don't care. People want to consume more, find money. People invest more, find money. There's no money. And next one, you will see that there's actually no money to find. Next one, please. This is, I try to go to the past prime ministers from Thaksin to Prayut to Prayut have to Prayut, the middle Prayut and the end Prayut. You will see extra liquidity as of May this year is negative 715 billion. This is actual number. Lowest in the 20 years, not why 20 years because BOT only keep data for 20 years. The lowest in BOT keep data. You don't have the money. It's confirmed by broad money growth. Broad money growth is 1.9%. If you have money grow at 1.9 and you expect the economy to grow 3.6, where do you find the money to finance your consumption and investment, so forth and so on? Okay, that is pretty much my presentation. That is, if you do monetary approach, you will see that Thailand is in liquidity shortage now. A liquidity shortage will prevent Thai economy to grow based on this kind of thinking. Thank you.
Thank you. Well, those are very sobering figures. On top of that, we have some political uncertainty going on here. Well, let's talk a bit more about that. There is currently some measure of investor uncertainty. How much of that uncertainty is stemming from the policies of the incoming government, however shape it's going to take, and how much of that is due to the fact that it's taking such a long time to form a government? Would anyone like to tackle that question?
I could. I think if the economy is on strong growth path, politics will play with little role. When the economy is on the shaky path, as we see that it's below expectation, like last year, growth was expected to be about 3.6% and it's come out at 2.6%, especially the last quarter. And when you compare Thai growth with our neighbors, Asian neighbor, 8 to 5%. We are the lowest, except maybe Laos and something. We are the lowest performer. So I think we have shaky confidence in the economy. When you add politics on top of that, things even become clearer. It's just like, if I have 100 million baht, I don't care this year gonna get 6 month or 3 month bonus. It's the same thing. I have 100 million baht. But if I live on day-to-day basis, bonus is extremely important to my well-being. I think the first quarter, Thailand still not perform well compared to our competitors. Other ASEAN nations, 2.7% is nothing to brag about. I think other countries 5%, something like that. When you add the politics on top, maybe it's not time to invest.
Okay. Dr. Chen, you wanted to say something?
Yeah, so we think the effect on uncertainty for investors is coming from the long transition, which we have included in our baseline projection. And the channel is through public investment. So Thailand has a large public investment pipeline, like the high-speed train, the MRT, upgrading of railroads, dual tracking, expressways, from Thailand to the northeast, to the EC. And we think, in general, it's a good direction for Thailand, given that infrastructure can help connect lagging regions. Also lower logistics costs, which is quite high in Thailand. and also has positive spillovers for the private sector. For this year, Thailand actually reached a 6-year high in terms of public infrastructure spending. That means a lot of projects are moving ahead, which is good news. But if you look at the performance over time, it has generally been slow, especially during post-election years. That's because new governments that come in generally tend to review the pipeline. So I think now the question is, to what extent will the incoming government review this pipeline, or will there be a drastic change? So in our baseline, it just reflects a moderate review. That's typically seen in historical periods.
Right.
Well, I think in terms of uncertainty, obviously if you're an investor, if you have doubt, you just leave the country first, and then you ask questions later. And I think at the period before the election, I think the Thai baht was considered quite strong as well. So that may have played a part that, people, foreign investors especially, may just have decided that it was the best time to maybe just leave first and maybe come back later when the baht is a lot weaker. And that was so the case where people just think, oh, maybe Thai baht is relatively cheap now, so they come back. I think one thing that it has been probably the main reason why the baht has weakened quite a lot, apart from the uncertainty, is the path of the interest rate. The Federal Reserve has not yet done with raising interest rates. While I think the Bank of Thailand is probably quite close to the end, I think we may have reached the peak of the interest rate in this cycle. Thailand, unlike the West, we're not combating inflation problem. We don't have any inflation problem now. Inflation is falling back to target now. So it's very unlikely that the BOT, given that the weak external outlook, will be forced to keep up the pace of, should the Fed increase the policy rate a couple more times, I don't see the need that the Bank of Thailand would follow suit. So I think that's why the baht has weakened, and that sort of drove investors away. Given that the uncertainty as well, then that's just compounding effect.
May I give some data? I track the reserve on weekly basis. In the month of May, there's capital outflow of $3 billion. In the month of June, there is a capital outflow of $2 billion. For what is the cause? I don't know. Just track the reserve. And this is the main cause of the weakening of the Thai baht. Money is leaving the country, and also the resource why we have a negative excess liquidity. For the second quarter, the whole quarter, $6 billion left the country.
Dr. Anand, would you like to add to that?
Just a little bit. I think it's kind of like egg and chicken kind of answer. I mean, right now it's quite uncertain, both of them. But the first thing that we're waiting for would be the long to form of the government, which we also included in our projection as well. That's for the baseline for would take about by the end of August that we could get the new cabinet, and also could get a new set of the policies that we could see that will be in line with what we expected. Because as of now, there is not quite clear of the direction of the policies of the government, the new government will become. So I think the long to form a government would be the one that I would answer in terms of uncertainty.
So let's take off from there and go into the next question, because this 3 to 4 months delay in budget disbursement, is it something that has happened in Thai history before? And also, could you explain what kind of disruption to the economy can we expect from a delay of 3 to 4 months in budget disbursement? What kind of obstacles do you see?
Can I answer first?
Please,
Because
yes.
that would be related to what I just answered. I mean, since we schedule, we expect that the new cabinet could be formed by August. And then in October, we expect that the cabinet could propose the new fiscal year 2024 to the parliament. It would take another 3 to 4 months in order to propose the new fiscal year budget to the king to sign, and then could be able to disburse. So that could be, the best case would be in February. And the effect that you're asking be in terms of mainly in terms of the capital budget disbursement, because definitely the current budget could be disbursed continuously. But in terms of capital budget, in particular, the new projects that could not be, approved, that has to be approved by the new cabinet, will be, not be able to disburse up until, next February. And, but however, those have already included in our projection for 3.2%. And if you look at the actual disbursement data for the first 3 quarters of this fiscal year, you see that has been in line with what we projected. For the current budget, disbursement will be achieved almost 80% already for the total budget. And for the capital budget has already achieved by 55% for the capital budget. And other than that, we also have the capital budget from the state-owned enterprises budget, which already approved for the whole, both fiscal year and the calendar year, because they have both types of the state-owned enterprises capital budget disbursements. And we expect that for the last quarter of the calendar year for this year, there will be an additional about 180 billion baht to be able to be disbursed into the economic system. And also in the first quarter of next year, there will be an additional of almost 90 billion from the state-owned enterprises budget disbursement. Yeah.
So what's your bottom line that it's not going to be so bad?
Yeah.
Okay.
That's why we still maintain our public investment quite high.
Okay. What about the rest? Would you like to add to, what kind of disruptions we can expect from a delay in budget disbursement?
Well, actually, the next year budget has already been approved by the caretaker cabinet. It's just awaiting the vote in the parliament. Surely the new government will dismantle the existing budget and rearrange things. We don't know which party would be the government and in what items of the budget they will dismantle, they will rearrange. I think the total number, the total expense budget would be the same, but they will juggle in it. Let's say if one party might favor of transferring the money from one budget to the welfare budget, one party might prefer something else that I don't know, but in the total amount would be the same, about 3.5 trillion baht would be the same. I don't think, the thing that I have to worry is financing the budget, because the year budget will call for $500 billion or something budget deficit with liquidity in Thailand. I don't see how they can finance it.
Mm-hmm. Yes, please.
Well, I think our 3.7% growth forecast this year does sort of take into account of the delay in forming the government. I just think that the disruption that could be in the pipeline should the government be delayed to form is the should there be an unexpected event like COVID again, where there would need to be a large government stimulus on some particular sector, that would be quite hard to implement. Were that to occur later on this year. So that would be the only disruption that I sort of foresee for now.
Mm-hmm.
Okay.
So let me put a bit more context on why we're talking about government spending, public infrastructure. So we said Thai economy has recovered to pre-pandemic levels, but that's actually not the right benchmark of whether Thailand has recovered. So if you look at Thailand's potential growth, Thailand is still below its potential growth. That means it's not using its full capacity, right? That means that if you look at all the activity in Thailand, it has not, some shops are not fully open, or employment is not fully back to normal. And one engine of growth that we have left is tourism, but tourism is not enough. Another engine we actually have left is the fiscal, because in our view, Thailand's fiscal space is still quite adequate. 60% of GDP is moderate compared to other emerging markets. So there's room for the government to actually implement its public infrastructure to boost growth in the near term, also longer term. If you look at the disruption, so disruption would be to growth in the near term and long term. It could shave off, we have 3.9%, it could go lower by a few, like 0.1 possibly, if there's a delay.
Okay, thank you. We're going to take some questions from the floor. Yes, please.
Hi, Peter Jansen. Let me direct the question at Kun Kiatipong because I think the World Bank recently did a study on climate change and drought and flooding in Thailand. Yeah, everybody is expecting a pretty severe drought this year in Thailand, and it probably will extend to next year. I haven't seen any of the political parties jumping on this issue, but I mean, the business community does seem to be quite worried about it. When you were estimating your GDP growth for this year, did you calculate, did you try and figure in how much drought detracts from GDP? And does it really? Because flood obviously costs a lot of money to repair the damage and whatnot, but drought, I mean, it's going to be good for the rice exporters. It's probably be good for sugar prices. One can see some benefits and some drawbacks for drought this year. But what's the World Bank's sort of overview on this coming drought? Is it going to be devastating, increased poverty, or what's going on?
Should I answer quickly?
Yes, please.
Let me say right off the bat, in the report, we actually focus more on the flood side, which we estimate to be around 5 to 10% GDP. And we see a slowdown in agricultural productivity and manufacturing productivity due to the drought. But drought is much harder to estimate because there's difficulty in estimating water productivity, particularly for manufacturing sector, which is changing, using more high-tech, high demands, and it's more difficult to see, right? When you're in the middle of drought, I mean, do you actually see the concrete effects of drought? But if you're in a flood, it's quite clear. So we do integrate that in, but what we're seeing is the effect is not as drastic as the floods, because if you look at the data, the precipitation data shows a clear trend on the upside, meaning there's very high risk of catastrophic flooding, but in terms of the drought magnitude, it still remains within the historical range.
Next question, please.
Thank you. Good evening. My name is Imtiaz Maqbul. I cover the travel and tourism industry. Very interesting that all of you all have mentioned the importance of tourism in driving the recovery, particularly as an engine of growth. But I was just wondering, a closer look at the figures that all of you all refer to actually goes back to what Kun Chachai mentioned about the amount of money that gets leaked out of the tourism industry, sent out of the country. The bottom line impact of tourism may not actually be that good when you include the amount that leaves the country as a result of credit card fees, management fees, franchise fees, booking fees, payment of loans, salaries, imports of wines and fancy meats and everything else. Do you all actually factor that bottom line into this, or is this an excessively rosy picture that you all are painting about the real impact of tourism? The second question, when you actually look at these issues that keep coming up, particularly those related to debt, is there any proof that Thailand has actually learned the lessons of the '97 crisis, or we just keep lurching from one crisis to the next, rather than looking at something more sustainable? Is there any proof at all that after suffering one of the worst economic disasters of the last century, which started in Thailand, have we learned any lessons from that at all in rebuilding our economies?
Oh, that's a big question. Who likes to go first?
Well, I'm the oldest person here among the panel, so I lived through the 1997 Tom Yam Goong crisis. And I spot the crisis a year before. The cause of the crisis is that Thailand did not have enough liquidity to support growth in 1997, but the government still tried to push growth to 7%, and it was disastrous. If we slow down, actually, I estimate steady state growth for 1997 would be -2% to 2%. Median is 0. You cannot push because there's not enough liquidity. And when you did not have enough liquidity, you borrow from abroad. That was the main cause of the crisis. We have not learned. We still live after the crisis. We managed the economy pretty well, but actually the helping factor is the deep depression of the baht. I lived through that time, so then I calculate the equilibrium price of baht dollar value should be 38 baht. Anything above 38 is support growth. Especially, that's why during the Thaksin time, he achieved very high growth because at that time, during his time, the Thai baht was 22.5 to 45.5. And then there is a huge wave of incoming investment and exports because the baht was undervalued during that time. Time has changed. If we have to calculate the equilibrium baht, then I have to do it again. I don't have the model now. But anyway, I think we did not learn. I look at what is wrong with Thai economy throughout the years since the Thaksin time. Is that since the Thaksin time, household debt per GDP 42%. Right now it's 90% plus. So it means that debt go faster than income 2 times. What kind of economy is that? The more you earn, the more debt you have. It's not sustainable. And this is what we are paying now. When the debt hit the ceiling, that's what the key point of my presentation. The debt has hit the ceiling. It's very difficult to push the economy now because debt hit the ceiling not only for the household debt, also the government debt as well. Whatever in the pipeline, you find the money. Official figure 61.3% public debt. But if you include on the debt that not yet booked and off the book is exceeds 70% already.
Any other perspectives about whether we've learned the lessons from the past?
Yeah, sorry, I don't know who asked the question, but that was a very good question. But I just want to point out that the crisis back in 1997, I would describe it as the rich man's crisis, where the problems were mainly felt, the after effects were mainly felt by the rich people, the banking sector, the people in the finance professionals. But I think this, it's not really a crisis yet, but it's ongoing problem that we are facing now in Thailand is more of a structural decline, because we are facing aging population, our economy is getting old, it's becoming obsolete. But the problem that we're seeing now is the household debt problem. So it's not the banking sector and the corporate sector have behaved really, really well since 1997, but now it's more like the people in general, the populace of Thailand like to spend a lot, and I think that could be the problem, in the pipeline. I would describe it as a growing time bomb. It's a ticking time bomb, but it's not going to crisis yet. But in 1997, we had a cardiac arrest, but now it's like a slow cancer. But don't quote me on that. Sorry.
That is a very good quote, though. Okay. Yes, Dr. Jan.
So just to be provocative, I think Thailand actually learned its lessons from 97 too well. And I think the debt problem is not a debt problem per se, it is a growth or lack of growth problem. And the two, the lessons learned and the growth they are connected. So what do I mean when I say we learned the lessons too well? So we look at the 97 crisis, balance of payment, current account was in deficit, you remember, around up to 10%. We had a fixed exchange rate, 25 baht, dwindling foreign reserves. Also, banks were borrowing in foreign exchange, and they were reaping the margin, the low interest rate abroad, and lending at high interest rate. So Thailand actually did enact reforms to avoid those things. So went to floating exchange rate, inflation targeting, a very transparent Bank of Thailand that probably the most transparent in ASEAN. Actually, they explain everything, and I don't think people bother to read everything. But anyway, there's a lot of data and explanation. Also, Thailand increased its requirements on commercial banks in line with international standards to keep buffers in case of a financial sector crisis. So IMF World Bank did a financial sector assessment. We found Thailand's stability, financial sector for banks were quite sound. Also for state-owned banks, SFIs, although there could be some risk from household debt or SMEs, but they were not large enough to pose as a systemic problem. And actually the contingent liability from state-owned banks are actually included in the fiscal debt numbers. So Thailand actually has one of the most expansive fiscal debt numbers in terms of definition. It includes a lot of contingent liabilities because the Thais were we are very good students. That we are asked to reach international standards. We tried to do so. And now in the last 5 years, we have the Fiscal Responsibility Act, Budget Procedures Act. So on the stability side, compared to other countries, Thailand is quite high. Actually one of the highest. Foreign reserve is one of the highest. Per GDP, it's around 40 to 50%, as a share of GDP, like one of the highest in the region. So that's like a war chest in case there's another run on the Baht. So I think the offshoot of that is that Thailand focused on stability, but not as much on growth or risk-taking or on innovation. And Thailand's growth has slowed since the Asian crisis, from 3-something% to 3%. And for people that are accumulating debt, I think what happened is that their incomes their realized incomes have not met with their expectations. Therefore, they've not been able to service the debt. Also, the pandemic, rightly so, debt has to increase when you don't have a job, don't have income, to keep your consumption balanced. So I think that can play also a good role during crisis, but in the long run, there has to be growth to make sure that household debt is able to be paid down. On the fiscal side, we're still fiscal as having space for the government to borrow more, to invest in the country, and to bring about growth.
Thank you.
Yeah, just a little bit adding the points that you have to differentiate about the root cause of the crisis compared to 1997, as Dr. Chen said, it's the banking crisis, but or the rich, kind of crisis. But now it's kind of like crisis that has been making in the household debts, and also the small scale firms, the SME debts. And what I just would like to point out is that what we concern would be the fact that if you see the structure of the household debts, you see that large part would be from the personal spending and also the credit card spending, and also mainly would be from the informal source of loan as well. Mm-hmm. So that will be the chunk that I believe that the next government should also taking care of carefully in terms of the informal debts. Yeah.
May I offer a different point of view? First of all, it is not true that the country in crisis because of balance of payment crisis. The Japan financial crisis of 1990, the Lehman Brothers crisis of 2008 has nothing to do with balance of payments. The country and the economy could collapse without any balance of payment problem at all. Second, the security of the Thai financial system. Thai financial system now on the book is very strongly capitalized. We have 2.5 trillion in capital, 700 billion in loan loss reserve, total 3.4 trillion. But the total household debt is 16 trillion. It's only 20% of that has to be written off. 20%, not half. 20% NPL. And household debt, as a personal loan and things, don't have collateral. 20% of 16 trillion is 3.2 trillion. If you write up on the reserve and capital of all the banking system in Thailand, the problem is that big, and it needs to be resolved by the next government. It will be a threat to the, and because of this, you see from my position, that's why banks slow down issuing loans. They know that their capital actually is tight. If you look at the statistics of the Bank of Thailand, NPL is only 2.8%, so low. But according to Credit Bureau, the NPL for auto loans is 14.2% already, and projected to be 40% in a quarter. Things could go that bad. Sorry, I don't want to paint a dark picture, but the data is like that.
You just painted a very, very dark picture. But, next question, please.
Yes, thank you. Prakun Baren, would you just repeat the comments you made during your introductory statement about the coming recession? Would you just go over those again to make sure, at least I didn't completely follow what you were saying about the recession that you said, I believe you said is surely coming, and perhaps you used the word depending harder or larger.
Right. Yeah, I mean, I just wanted to expand on that because the countries in the West, Americans, Europeans, they're facing inflation problems in their own domestic economies. So the way to bring inflation down is to engineer a slowdown, but because the slowdown hasn't occurred, hasn't materialized, so I think a recession will be forthcoming. So it's not a matter of if, it's a matter of when. So when they do come, it's going to be bigger and larger than a lot of economists had expected. It's just like a problem. If you treat it early, then it's gone. But now that it's taking a long time before they can bring inflation down, and the pain of the cumulative hikes in interest rates, in the West, have not really taken a toll on the economy. So I expect the economic recession will be much deeper than a lot of people had anticipated. So that's my comment. Not sure if I...
Well, certainly there are a great many economists who would agree with you, but there are also quite a considerable number who take a more optimistic view. To say someone who's very well known, Paul Krugman has consistently, both in his articles, in his podcasts, and in his more academic writing, taking a much more optimistic view, almost of like, where is this recession that we keep being promised? Where is it? Where is it? And then he quotes various statistics indicating that it's not yet here, and perhaps it will not be coming. But anyway, that we don't know. One other question I'm very interested in, that having lived in many countries like people here, one often hears the statistics that you gave about the per capita spending of the different tourist groups. I've never understood, how do you compute that? You don't follow people around, and when they order a meal, say, well, now, where are you coming from? How do you compute that the Malaysians spend X number of baht, the Indians X number of baht, a European country X number? How do you compute that figure?
Well, I'm glad you asked me this question because the expert is right beside me. She would know how to compute. But I think the figure that we get is from the tourism board. But anyway, it's you.
It's from
Survey, right?
Yeah, that's before that, the spending per head for the foreign tourism will be from the Ministry of Tourism. That would be based on the survey. But as you know, the Bank of Thailand also has the balance of payment data, which is record the transaction of the credit card that foreigners spent. So they have another set of data,
but
which
collect. You can separate the money of the Chinese and the money of the Malaysian. Money is money, so it has to be done elsewhere. The Bank of Thailand just know how many dollars spent, but they don't know who spent it. They cannot smell the currency.
so now that they kind of would like to combine. I mean, not combine, coincide between those set of both data.
Triangulate the data from different agencies.
Right, but yeah, that's still under discussion.
But may I add some things? This from an economist. Tourism money is a low value added activities. When they spend $100 in Thailand, there would be a cost maybe 80, 90 or 95. There's no survey on that. When you survey on that, you will know that the difference that they live in the country is not much. Tourism is lower at the country. That's why you see the year that we have 40 million tourists or 2 trillion baht. You say on the spending side, but we don't know on the expense side. So we have to pay for those tourists for the gasoline to take them around, for food, for this and that, how much. Even the hotel, if you book the hotel chain, then you have to pay the fee. Then we don't know much. We just know that the 2 trillion baht did not, 2 trillion baht or 10% of GDP, 12% of GDP did not drive Thai GDP growth to 12%. Thai GDP growth that year is only 2.2%.
Thank you. Next question, please.
Good evening. May Wong from CNA, Singapore Television Station. If you can please indulge me, I've got 3 questions for you. Any of the panelists open to answering the question. Number 1 is, Thailand's economy and any economies will be dependent on investor confidence. Right now, there is so much uncertainty in the current state of politics in this country. How much confidence do the investors have, and what are you hearing from them right now, particularly obviously from World Bank as well as Khun Burin? My second question is, obviously we're looking at Khao Klai Move Forward Party. They've been fighting for decentralization, and that also means the fact that individual provinces will be able to manage their own finances, will be able to manage their own programs. How is that perhaps going to put some strain on the national budget going forward? What are your concerns about that? My third question is talking about the future, obviously. Well, nobody really has a handle on the crystal ball right now and what's going to happen. But looking ahead then, how long is Thailand going to be able to chug along if this continues to play out, if there is a deadlock, and the fact that policies will not be able to be implemented over the next 6 months or even longer? How much of a setback is Thailand going to face? Thank you.
Thank you. So we've got 3 questions, one on investor confidence, another on decentralization, and one on how long Thailand can chug along in its current state of affairs.
I take the last.
Okay. The last question is how long Thailand can chug along?
Not long, and it won't be long, because Thai politics is controlled by big businesses, and they will suffer when the economy is not moving forward. They have debt to pay, they have salary to pay. They will push for a solution as soon as possible. And I think the solution is not as hard as you think, because you don't think of best 1, best 2, or best 3. You think of the worst 1, worst 2, and worst 3. And pick the worst that is least worst. You cannot pick the best. There's no such thing.
Would anyone else like to tackle that question? That's like asking how long is a string. Okay, second question about decentralization. Yeah, would that put a strain on the finances? Would it put a strain on the national budget? Would anybody like to? Yes, please.
I really like the question on the fiscal decentralization. So the World Bank, we actually did a study on this when it was included in the Constitution a long time ago. And I looked at that report, to see what progress we had made. And actually there hasn't been much progress because the Thai system still is fragmented and centralized in terms of the decision making and budgeting, but functions and delivery are scattered across multitude of agencies. When we look at specific sectors, let me give an example like education. Education takes up a large chunk of the budget, If you look at share of GDP, it's around 5% of GDP. And if you look at the outcomes from education, it's actually now lagging behind compared to countries. And other countries are catching up, like Vietnam. So how is it that we spend so much, but we get so little? I mean, there must be some misallocation. So a lot of the money is actually on salaries of teachers and buildings, and they're all being budgeted, administered centrally. So you go to each school, there's actually a shortage of schools for specific subjects. Well, there's only one teacher, and the teacher has to teach everything, right? So class size can be skewed, very small or very large, so not at the optimal class size. So there's actually room there to consolidate the schools, get more bang for buck, and more importantly, to give the decision back to local authorities to decide, who to hire, where to consolidate, what to build, and whether it will put a strain on the government finances. I think if done well, it can actually do the opposite, because you get more bang for your buck. You have more space, you free up money, you can use it for other priorities. Second, you can also allow local authorities to raise funding on their own. For example, now Pattaya, Bangkok can do so, but how about Khon Kaen, or Chiang Mai? They have their own infrastructure needs, and they have cleverly done it by going around the system by like light rail in Khon Kaen with the private sector. But if we were to do it systematically, I think that could actually transform Thailand's fiscal management, also grassroots development in local regions.
Thank you. Anyone else?
Yeah, I just would like to add a bit up in terms of decentralization, that it's one of the key that in our development plan has been mentioned about. And since we have the law for the decentralization for the local government back since 2008. That would be the recent law that we have. But since then that we have that law, there's kind of like the problem between qualifications of the role and responsibility for the local government. It's not quite clear yet between the local and the central. And also in terms of the revenue for the local government has to depend largely from the central government still. Just only like 10% of their own income that would be spending for them. So what we recommend would be to foster make it clear for the role and responsibility of the local government in order to have the very clear financing and also the source of fund of themselves, and also the in terms of the transfer of those responsibility and the roles from the central to the local government has to be clear as well. Yeah.
Mm-hmm.
So more job to be done.
Right. I think May's third question was about investor confidence, right?
I'll just take that question quickly. I think the confidence of the investor is clearly reflected by the poor performance of the stock market indices, which is, I think, one of the worst in Asia, if not the world, this year. But, as Warren Buffett said, be greedy when others are fearful and be fearful when others are greedy. Maybe it's a good time to get yourself back in.
Good time to buy stocks. Okay, next question, please.
I have just four really quick questions. First, in your analysis, you've mentioned FDI, tourism, you've mentioned fiscal portion of GDP. It's interesting, I haven't heard anything about corporate investments, and maybe I missed that discussion. Is it because in Thailand, the corporates not play a very large part in the GDP growth, or you have markets like where maybe some countries where the corporate investment plays a large part in GDP growth? I'm curious to know what your corporates here, like Central, CP, what contribution they do to the GDP growth. Secondly, we were talking about the Asian financial crisis, and you haven't really mentioned much about, there's a disconnect. I know right now in China, we have a very serious renminbi issue. I don't know if you've been following this. And that's a currency issue, and that's the disconnect between American inflation rates and Chinese inflation rates. And in many ways, you mentioned that domestic pressure limits your ability to raise rates. Now, what happens if America continues to raise rates beyond your expectation? Is that going to be where does that put the Bank of Thailand, and where does that put the government and everyday households here? So I'm curious to know, I know you've mentioned your reserves are quite robust. We all say that, right, because it's about confidence. But when you lose confidence, you get things like Silicon Valley Bank, even in the most robust economy. So should we be thinking about that as well here? Thirdly, you mentioned infrastructure, and I'm relatively new to Thailand from Korea, so we're part of that like 21% that have invested in Thailand. In terms of infrastructure, we've heard this thing about the Thai Canal, and we're just wondering why Thailand doesn't take that, what's required to get consensus, political or economic, to get the Thai Canal going. That's it, thank you.
Can I answer the last one, the Thai Canal? The reason is this: I did the research for the government on Thai canals, and I advise against it. The research team compared the Thai Canal with Suez and Panama. That saved 30 days of traveling time because you have to go through a continent. But the Thai Canal, we just go save the journey through the peninsula is only 3 days. The cost saving is only for 3 days. Compared to 30 days, is not financially viable. Not to mention the environmental issue, we look at the alternative that is not called land bridge. Land bridge is even worse because you bring ship A transfer to the train, and you have to have ship B waiting for the train to pick up. The time saving and the cost not valid. So to the team, the advice is that it's not financially viable project. If any idiot want to do it, be our guest, but the government should not put the money in it. The Prime Minister, Kun Prayut, agree with our team and hold the project. I don't know, the new government could have different ideas and things, but that's the starting of it.
There was a question about corporate investments. Would anyone like to take that question? Yes, please.
So we looked at, long-run economic growth in Thailand, and when Thailand started to grow. And what is interesting there is the private investment actually slowed dramatically from pre-crisis to after crisis to around like 17%. It's been there, and then it looked like it was coming back up, and then we entered a cycle of protests, I think about 2 decades ago, and then that investment rate fell again. And but if you look at Thai firms concretely, it's interesting. It's almost like the two Thailands. We have very large, successful firms that invest and abroad. They sell globally. They account for a large. For example, like Thai Union Frozen, I think has bought major tuna brands account for like 30% of canned tuna, even though they don't have the name on it. And Indorama produces a large share of the automobile airbags for plastics. So there are these companies that are very successful, but if you look at another part of the economy, there are smaller firms that struggle to stay afloat, even though they are quite productive, and they're not able to invest in R&D and to find the skills. So we think one obstacle, and this relates to tourism, is like a lot of corporate firm activity that are not doing well. They reflect, one could be lack of open markets and competition. Another issue could be that these firms are not sufficiently skilled to move into higher valued global value chains. So they're doing activities that are not that sophisticated. They do inputs to other firms. So you look at globally, firms that do well work on services. And services is where the growth is. If you look at Thailand, the service sector is one of the most restricted in ASEAN. I think it's the second highest after Indonesia, actually. So one interesting thing about service is that it's difficult to get talent and new intellectual property and FDI if they all don't come together as a package. So remember I said investment has been low, services restricted, growth is slowing. I mean, these could be, all related challenges that Thailand is facing. So, in the future, government were to be able to tackle these issues. I think we can move to a higher part of the global value chain. Tourism too. Actually, tourism, the country that gains the most from tourism is actually a high-income country. It's France. So Thailand has the ability to move into high value added in tourism.
I'll just take the other question then about the disconnect between U.S. inflation and Asian inflation. Well, it's just the performance of the economy are different. The path of the economy are different. There's a boom in the U.S. Well, sort of, but it's a slowing economy in our region. So that's reflected in the inflation dynamics. Coming back to your question, would we have a repeat of Silicon Valley Bank in Thailand? I don't think so, because as I mentioned before, I think the Thai banks have been quite well behaved since the 1997 crisis, and the Bank of Thailand have been quite a tough supervisor in terms of the products and the exposure to any particular sector. So the banks are quite diversified, well diversified. So that's not going to be a problem that SVB had, where they were just concentrated on a particular sector like startup. So we don't think we'll have that problem. And given that the relative weakness of the Thai baht, we're not on a fixed exchange rate anymore. So one party benefit with a weaker baht, the exporter benefit compared to the importer. So last year when I was talking to clients, the importers were just complaining every day, the exporters were just smiling. So, one win, one loses. But I think overall the corporate sector have learned how to hedge. They're quite careful. They're not trying to have a fixed rate mentality as before. So I think they're quite adapted to the floating exchange rate nature of Thai baht.
Thank you. Next question, please.
Hello, Lisa Martin from Agence France Presse, and I'm also the FCCT president. The panel has noted that Thai household debt to GDP ratio has reached 90%. We know a lot of that debt is personal loans, credit cards, car loans, and not the more stable kind of debt, home mortgages. Just wanting to get the panel's thoughts on when we might see some of that debt go bad.
Now.
Now, okay. Kun Chacha is quite clear, it's now, but what about the rest? When will those loans go bad?
We hear some news about the car loan have been going bad, and the people in the car industry say the sales figure have dropped sharply after the election, and also the bad debt associated with the car loan have spiked up. So that I think that is yet to be to be in full effect. I think that is developing. It's growing, but I think it will be manageable because at least it's collateralized.
Mm-hmm. Yeah, it's quite hard to answer when, but as you know that if you know that the auto loans would take about 3 years of 3 to 5 years, housing loan will be that. But for the private and credit cards, that's quite difficult to predict. But yeah, as Chai mentioned,
easy. By Bank of Thailand rules, you have to pay 5% of the principal.
Yeah.
So average is only 20 months loan. And this 5%, I think it will expire June or July this year. It would jump back to 10% minimum loan repayment. That's only 10 months. If you jump back, half of the credit card loans would go back. Because you double the payment.
Okay, thank you. Next question, please.
The panel have mentioned a lot about public spending based on debt or government spending on infrastructure, but there's been no mention of the quality of the investment, the quality of the government management. All long-term projects, all infrastructure like transport or education or healthcare requires long-term planning and coordinated planning between the various government ministries, and Thai politics isn't noted for any of that. But in particular, when you've got a military government that's been in power for a long time, the quality of the long-term management seems to be lacking. You can spend the money on infrastructure, but if it's not linked, if it's not coordinated, you don't get any benefit. Is the fact that Thailand has the lowest GDP of the ASEAN countries a reflection of poor management? And can that be corrected by incoming political parties who have a series of policies and projects to reverse that situation?
Oh, that's a question about the quality of the projects.
I will answer first.
Sure.
Yeah, true. Yeah, this continuation of the government is the one of the key limitations for the Thai growth, for the long-term growth, and we realize that because that will lead to the discontinuation of policies as well. But I would say that compared to the regional peers, Thailand was comparable, relatively good in terms of the investment in infrastructures, the quality of infrastructures. But what we concern as a central planning agency would be the quality of human capital. That would be the one that we would like to mention in our 5-year plans. And yeah, in order to matching the skills of the labor with the requirement of the industries will be the one that we trying to push up onto that. So that would be the things that I would like to add up.
Right. Yes, please.
So the World Bank, which has published this report, is called the Public Expenditure Report, which asks this question that you asked, what is the bang per buck in terms of infrastructure spending, also human development, education, health on outcomes, your health outcomes, educational attainment, logistics performance. And the big picture is that Thailand is not that bad in terms of the outcomes, particularly for infrastructure and health. Where Thailand could improve particularly is education, particularly for primary, secondary. One thing you raised, I think, is very important, is fragmentation, right, and coordination. We note that is an issue for the fiscal authorities and the line agencies. For example, I'll give you one sector we mentioned is water. And we had the Great Flood in 2011. If you look at the infrastructure that we proposed after that, as one of the mega projects, the implementation disbursement is actually the lowest compared to the other sectors. And one reason is because it involves so many agencies, very multifaceted. Appraisal, feasibility is very difficult, environmental impact, and movement of communities, relocating communities is also a challenge. So to be able to push forward on that agenda, Thailand has tried to coordinate through, there's a new water agency under the Prime Minister's office. And if you think it's made progress on the coordination, but as you said, many things depend on the next government. So there's some projects in the pipeline that would depend on the incoming government's approval.
Okay. You didn't hear it from me. I was consultant to many government infrastructure projects. After the coup d'etat, we supposed to have clean government. I was working on a project then, so I cut the infrastructure cost, building cost by 20% because you are clean government, you don't need that, do you? No, Thai people laugh. The government was mad. They told me to restore the budget to the old level. That's my experience. might apply to only one that particular project, I don't know. But duplicating projects. You know, I went to the cabinet meeting to present my project. And it was, you know, my project is a rail project from central Bangkok area to the south. And then there is a highway project, and there is a tollway project. They all go to the same destination, and the question is, this Deputy Prime Minister said that why are you doing three projects at the same time? The answer, because the budget arrived at the same time.
Interesting. Okay. Next question.
My project passed though.
Yeah.
The government approved it.
Marwan Mark of Nikkei Asia. Thailand has been recognized for its economic inequality, and some people have described the economy as an oligarchy. Move Forward Party's planks is to deal with demonopolization, to address the concentration of economic wealth in the hands of the oligarchs. How challenging would it be if Move Forward forms a government to enable other players to emerge in the market and contest the economic power of the oligarchs?
You mean how challenging politically, or?
Well, how challenging would be other economic players to stand up to the economic powers that have run the country in the private sector? Because that is what Move Forward wants to do, right? Demonopolize.
Right. I mean, I'm trying to understand your question. Are you saying how challenging it would be for the other
players, the small, medium,
to come up to fill
small,
this
medium
space?
economic players to challenge the oligarchs?
To challenge the oligarchs. What do you think? How difficult or easy would it be for the other smaller players to come up to challenge the oligarchs?
I can say, I mean, I don't think I can answer your question completely, but maybe part of it, because we looked at this issue of firm dynamics, firm productivity, and I answered the gentleman's earlier question, you know, and there seems to be some parts of Thailand that are very productive, some parts, there are large firms that are not as productive, but they seem to be able to stay in the market despite smaller firms that try to enter and are equally productive, if not more so, and the small firms have to leave. So there seems to be indications of markets that are not as open due to lack of competition, but there are some parts that are very open, especially the parts that trade, export, import abroad, but the more domestically oriented sectors seem to be more protected, whether through outright monopolies awarded or through concessions, price controls, contracts. You know, it's a bit more difficult to see, but if you look at the firm dynamics, it's quite clear. So the question is, how do we encourage more healthy firm dynamics? So one is to encourage more competition, and we have the new Thailand competition bill. We think that's an improvement, because the last bill, for example, had issues of governance. It was captured by, you know, certain agencies and large businesses, and now it's more independent. It could improve in terms of implementation. We think in terms of like areas related to state enterprises or incentives for reporting anti-collusion, duopolies in the system, like a whistleblower function that many countries are doing. If you look at the smaller firms, they also have other issues that are more complicated, we think. It's not just competition, but also access to skills, financing for R&D. So that would also need to be handled. So that's on economic side, but it takes a great deal of political will to actually implement that.
Thank you. We're going to take one final question if there are any other questions. No? Great. Thank you very much. I think that's all the time we have for today. Looks like this government the government that's going to come hopefully in the next week or so will have a lot to implement. And our hope that is that it forms soon, so that perhaps you guys could be able to advise them. Anyway, thank you very much for being such enthusiastic participants today. If you haven't already done so, please consider taking up an FCCT membership. It will give you free entry to exciting events like tonight's. Have a very good evening. Thank you again. And please give a very warm round of applause to our panelists for their insights tonight.